It's a beautiful day in this neighborhood, a beautiful day for a neighbor. Won't you be mine? I guess I didn't have my mic all set up so I can talk to you people over there in the world. Where are you all hailing from right now? Throw it in the chat. Let us know. We want to know. Well, unfortunately, there wasn't really anything that happened in the market for us to talk about this week, so I don't know. We'll have to find something, right? I mean, my goodness. What do you guys, what was the most important thing that you think happened? Was it the Starbucks earnings? Was it, was it Warren stepping down? So we got, or not yet, potentially. Yeah, I saw a little bit of you guys talking there, Shannon and Pat, about, we're going to see. We're going to find out if Berkshire has that Buffett premium, right? And I don't know. I think we'll find out how many people hold Berkshire just because of Warren Buffett. And when he knows he's no longer there, we're going to see how many people understand the business. I didn't bring it. It's over on the bench over there, but I bought Buffett and Munger Unscripted. How apropos. I'm actually going to be talking the beginning of June, with Alex W. Morris, the author of Buffett and Munger Unscripted. And he did what I did. He listened to every Berkshire Hathaway annual meeting going back to 1994, right? Because that's when they released it. They would internally record them. And then I think in 2018, they released those to CNBC. And that's how we have them all. So they only did 94, though. I don't know if they were recording before that. But he listened to them, and he condensed it, compiled a fantastic book. I was thinking of doing something like that, but actually, now that I'm looking through his book, I'm like, oh, this is much better than I would have done. So kudos to him, and I'm excited to talk to him. So yeah, we're going to find that out. And so what's up, Patel, Chris, Frank, Shannon, all you guys? We can talk a little bit about Berkshire, what's going in there. Yeah, it's funny. He mentioned it too, right? When Warren was 11 years old, he bought his first stock, which was City Service Preferred. And I don't remember the price he bought it at, but it's funny because I think he says when he was, he says, I bought it at 11. And before then, I don't know what I was doing. I was just wasting my life. I was wasting my time. But the dude he was a child prodigy. I mean, I know he's very humble now, and but I mean, come on. That's a special talent, and we'll probably never see the likes of a Warren Buffett again. So what's up, Stan? Craig, where are you, in Disney? You're in Florida, aren't you? Something like that. But yeah, so actually City Service, I don't know how many of you know this, but City Service, let me see if I get what's that thumbs up? Am I giving myself a thumbs up? It pops up. Oh, by the way, if this is your first time here, my name is Russ. How's it going? What's up? We're going to look up some stocks, do some news, whatever you guys want to talk about. It's our time to hang. This is our time. This is Dapper Dividends Unscripted, right? So back to City Service. They were bought by Citgo, I believe, or they merged with Citgo, which is a Venezuelan company, right? I know a lot of people were upset with Hugo Chavez back in the day. They didn't want to buy Citgo's gas, right? So City Service became Citgo, and then I believe Citgo was acquired by Occidental Petroleum. Correct me, somebody, if I'm wrong. So it's kind of interesting why Warren is still buying Occidental Petroleum, because he pretty much goes all the way back to 1942 when he was 11 years old, and that was his very first stock. So Patel, yeah, UNH talked about it a little bit on the last one. Look, I don't want to take it the wrong way, and I think some people might have, where I said that there are factions in the United States of America that want single payer. They want the government to be the only provider of health insurance. Will we have a blend? Will that ever come to pass? I don't know. I think some reform does need to be made, because you can't argue. It does seem really, really expensive. So there are some reforms I think that have to be made by people far smarter than me. But I don't want single payer. I don't want the government being the only entity, because then you run into the problem of, if the government is the only authorizing figure of healthcare, well, then they determine who gets it and who doesn't, right? So I don't know if they can do a more equitable way of single payer that's fair for everybody. I don't know, but UNH has its problems with that, government regulations, and just a lot of uncertainty around it. And of course, right, we say the market hates uncertainty. So there's a little bit of a glitch. There's a little bit of hair. There's a little bit of stink on UNH. And I know, I think Dividendology, right? I think Eli is buying UNH as well as some other creators. But for myself, even though they are our health insurance provider, and there's been some, I don't know, issues there. It's not always the smoothest system. They're the largest insurer in the United States. So I guess as long as we don't ever go to a full government having a monopoly on healthcare and outlawing that, then I don't know. Maybe there'll be a hybrid approach. We're going to have to see, but that's obviously here in the United States, one of the things that the Democrats, that the liberals run on, right? So I think some people last week when I mentioned that are thinking I advocate for it. I'm not, but I'm trying to be a realist, and you can't say it'll never happen here. You don't know. We've never seen this movie before. We don't know how it's going to turn out, which is what makes everything so interesting, right? So just like Philly winning that Super Bowl. Will they do it again? Nah, probably not. I don't like to see repeats. So Matt, what's going on, Matt? I'm good. I'm good for you. Or I don't know what I was saying there. I'm good. And I'm glad to hear you are too. Cheers. Looks like I'm on fire there. Yeah, so what do you guys think? Do you think that when Warren finally retires that there's going to be a sell-off in Berkshire? Because I will buy. Quite honestly, I don't think a lot of people understand that Berkshire is designed to run kind of autonomously. It's almost like a closed loop. I know they have some debt, but from what I can tell in my amateur position is that very rarely does new money ever come into the Berkshire ecosystem. Almost everything is internally generated. And now, I mean, not in, obviously there's revenue and things like that, but they're not selling any new shares. They are I don't even know. I'd have to look. I think their debt, I don't think they have any debt. I'm pretty sure they don't have any net debt. We can look at that if you guys want to, but it's it's why they have almost a 20% annual compounded annual return since 1965, when the S&P 500 is just over 10, 11%, something like that. So it's not an accident. Will we ever see that again from a Warren Buffett? Dude, he had the person was right. The time frame was right. Right. He always says he won the ovarian lottery. And if he was born in Russia, if he was Jason Zweig from Wall Street Journal had an awesome piece on it. And it's the same thing. If Warren has said many times, if he was born anywhere else, if he was born 100 years earlier, 100 years later, probably wouldn't be able to have the same return. So yeah, again, we can check. What's that? Accenture. That's a consulting firm, right? I'm going to learn to write with my left hand here. Not looking so well. Big news also on my home front. We booked, if you get the newsletter, I would highly recommend it. It's free. Why not? We booked our flight, some hotels and experiences in London and Edinburgh. Is how they say it. Edinburgh, not Edinburgh. And a little painful because just on those things, we're about 10K in. And we still have food and obviously some travel and souvenirs and maybe a drink or two at the pub, or 5 or 6, we'll be on vacation. So, that's what the genesis of the newsletter was. My thoughts around that, actually paying for it. If you guys follow, that my wife and I set up a high yield savings account just for travel. And we started putting $300 every Friday into that about 38 weeks ago. So we're just over $11,000 now that we've got that. So Yeah, you know what? We'll look at UNH real quick since a couple of you are asking, and I know it's a popular one, and I don't know. I just can't see myself investing in them. I think there's so much uncertainty that this time may be different, right? You're never supposed to say this time it's different, but they're a Dow component. I think aren't they the largest company in the Dow, which is so antiquated of a system, the Dow, that they weight everything by stock price, which is why, remember when Walmart, they split the stock? That's why they moved way down in the Dow weighting. Like that's just, I don't know. It's an old, I really don't pay attention to the Dow. I don't know if you do, but it's such an old, and what's in there? Isn't Apple a Dow component? I know there's some tech in there now, but yeah, and it's funny you say that, Frank. And what's up, Fast Study? It's funny you say that because they're autonomous on several levels. The money, the the companies it owns, and I guess the equity portfolio, the stocks it owns too, when they pay dividends, money just gets sent to Omaha. Warren allocates it, right? So it's such an interesting thing that he's built that I think has such momentum that it's going to obviously well outlive him because you got companies like Dairy Queen, Brooks, Jazzwares. My kids like the Squishmallows. I don't know if you got kids, Craig. Does your daughter have the Squishmallows? Right? By the way, I know rambling here. Ryan and I, Mr. Williams and I, are planning to do Omaha Berkshire weekend next year. He posted on Blossom. I hope you follow us there. But his dad, Ryan Williams' dad, went to the Berkshire annual meeting. So, he was sending him pictures. Ryan was sharing those with us, and I was thinking I should be there. My wife said, "Why didn't you go?" And I'm like, I don't know. Good question. I live 6.5 hours. Chicago is about 6.5 hours drive from Omaha. So I'm going to do it next year. Hopefully I can see Warren in person. But this year, you know what? I had to work Saturday. I listened to almost the whole thing. Of course, the last 30 minutes, I hit pause. I got home. And then I'm seeing all the blow up. Like, what? I'm like, I almost listened to it live. Almost. So Fast Eddie. Yeah, we should be good for that. But we're also, I've been looking at a few financial advice only fiduciaries I want to get a snapshot of our current finances from a professional. There's a website I found called Advice Only Network, and you do a little survey and they match you up with somebody. Actually, found somebody here that's in Chicago, interestingly enough. And yeah, it's like a 90-minute checkup. It would be $450. And it's somebody that, again, just to get a set of eyes, they're not handling anything for you. And all that they do is you share with them everything you have, where you're at financially, and then they will give you their professional opinion. So we're going to look at that. And, I was thinking about it, Eddie, that if at 50, I wanted to take a year off from 50 to 51, but as I'm looking at things now, if I could work to 52 or 53 and then be done, and then move on to something else, I don't know, man. I guess we'll cross that bridge in a few years when it gets there. I just turned 47 a couple weeks ago. So, I might just stick it out a couple more years to then be done. And I don't know. I hear funny things. I don't know if any of you are retired or talked with anybody that's retired, but they will say that they found when they hit the point where they could quit their job, that they were completely financially independent, that a lot of times they didn't. And I don't know, maybe it's a case of being institutionalized. How prisoners, I know, great song by Suicidal Tendencies. I'm not crazy. You're the one that's crazy. Institutionalized. Mike Muir, God bless him. But yeah, they do the 1 more year trap, right? Like 1 more year, I'll get a little more money and then I'll have one more. And then 1 more year turns into 5 and 10 and you never leave. But I've heard from people that they say when they no longer need that job financially, they feel like a weight off their shoulders and they're like, I stick with it because they don't mind the people and sometimes they don't mind the work. But when you are not going to a job just for the money, I guess it adds a different dynamic. And some people never really experience that until late in life. So we'll see. But what's up, Michael B. Mlashinsky? That's a mouthful. Got a mouthful of marbles in there, the Mlashinsky. So yeah, anyway, that was a long answer. I hope there was something valuable for some of you in there. What's up, Grill and Nurse? Started a position in General Mills. Yeah, I mean, consumer staples, right? They're always going to be around. They're always going to have a need. They're never going to go crazy like Nvidia, but they're probably never going to get clobbered like a mortgage REIT, where Arbor Realty, as you'll see, did cut their dividend. But after the cut, I think the dividend's still like 11%. Adam, you're not too late. Yeah, Frank, you're right. Nvidia's in the Dow, so there you go. It's the Dow Jones Industrials got Nvidia in there. Makes a lot of sense. Same thing with Walmart, United Health, right? All those old industrial staples that we love, you know. No way. Where in Alaska are you, my friend? Well, I guess you don't have to disclose it if you're in a secret location, but yeah, my kids have those damn things. I don't know. They won't hear me, but oh my God, Craig, like the freaking room, like my one daughter's, there's like 10 of them on her bed. I'm like, how do you even like, what? And I don't know, I guess. So there you go. Warren, you should be happy. I've given my money to Squishmallows, which is owned by Jazzwares, which is owned by Berkshire. Oh, that's cool, Adam. Yeah. So if anybody just popped on, what's up, Dan? I told Adam that I've been toying with the idea of, from a financial professional. So, Adam, I don't know what you, I guess that's what my thought was. Do you have a accolades, any of those certifications? Like Dan, I think you have what do you have, CPA, something like that? But yeah, anyone who just tuned in, I was saying that I was toying with the idea of getting a checkup of our financial scenario and situation from somebody that's an investment professional, not handing money over for someone to make decisions. It would just be that. And a lot of them, they're about anywhere from $400 to $600 for a 90-minute, they call it, checkup. And that's all they do. They just give you their opinion, you know, take it or leave it. So that's something I'm thinking about, because I don't know if you guys have noticed, but I'm not perfect. I'm not. I know, right? Tony, finally you made it, man. We were sitting here waiting around. I was like, what? I don't know when Tony's gonna roll in, but we got to start the show here. We'll give him, 10 more minutes. Yeah, good point, Frank. Good point with Nvidia, but that's right. They got so I'll tie this into Warren, right? Nvidia. I kind of tried to understand it, but when I heard Warren and Charlie say that they don't understand any of the technological companies, that it's very difficult for them. It goes in their too hard pile because it's outside of their circle of competence. When Warren would my kids, they joke, if my voice cracks, they'll I don't know what they say. It's like when I burp, sometimes they'll say, like, look at each other and say, new burp unlocked. Like, I don't know what that is, but they'll what was I saying? Warren Buffett, Nvidia. Oh yeah. When Warren and Charlie would say they don't invest in technological companies or semiconductor companies, what have you, I would take that to mean like, oh, I shouldn't invest in that too. And back in the day, I didn't. But all that they're saying is, look, we we know our circle of competence, and there's the circle. We know our circle of competence, and these things fall outside of it, so we won't invest in it. So I would think, like, that's me. I shouldn't invest in that too. So they're not saying you shouldn't invest in it. They're saying we don't invest in it. But if you understand it, and at one of the annual meetings, they said, look, there's somebody that if they understand whatever the new technology is, go ahead and invest in it if you believe that you understand it. So yeah, we can go over some of the earnings that are this week. Yeah, Adam, and it's funny you say that. I've thought about kind of working with uh, an AI, right? One of the AI chatbots as just getting their opinion too, putting all of our financial data in there. And yeah, I don't know. So here's the thing. I some time ago, I don't know if you guys ever listened to the Choose FI podcast. They were talking with somebody that is, I think they were an accountant or some kind of professional. I don't even remember, but they would say that every now and then they would do an advice only. You pay by the hour for financial advice to see if there's any blind spots, any loopholes. And I guess that's what I'm getting at, Adam. I'm curious if there's something we're missing, something we're sub optimized for, any blind spots, any loopholes we're not exploiting, something like that. So, yeah, the kids still live. Oh, when we retire. Well, dude, I hope not. My oldest, I have two kids. So my oldest will be 18 in September, and the youngest will be 18 in December of next year of 26. So I don't know, man. Put it this way: if they are still living with us, then I'm going to have them contribute, right? They're not going to get a free ride. They need to get a taste. Don't tell them I said you this, but I'll start charging them rent and I'll just put it in a high yield savings fund or something that'll pretty much risk free gain interest. And then when they decide to move out, ta-da, here you go. Here's a gift for you. So that's I hope they can't hear. I think they got earbuds on or so, or wherever they're in the other room. But that's kind of my wife and I's plan. Here we go. We'll charge them rent, and then when they move out, we'll give them a gift. Just be giving them their own money back, right? So, but yeah, that's it. And then no more kids on the way. Eddie, shop's closed, right? Daddy here is fixed, and so is mommy. So put it put it this way: if my wife got pregnant, it would be a miracle baby. Quite honestly, that would be impressive, very impressive. Um, Dan, yeah, thanks. The retirement rep at your union is a salesperson, so you have to go elsewhere to talk investing. That's funny. Yeah, I don't know. We'll see. I'm thinking about it, and just I don't know. I'm curious. I've never had a certified investment professional give me their professional opinion on just everything we got going on. So I'm still thinking about it. And then what's up, Gabe? Nice to see you back, man. Yeah, we'll see. We'll see about that market going up. We could check the futures, right? Real quick. Pop onto them. I'm looking at that. I'm like, see, I cut my own hair too. The kids call it a bowl cut. You can't tell now. You guys don't have the pleasure of seeing me when I don't have product in my hair to, I guess, the 1950s called want their hairstyle back. But when there's nothing in my hair, my kids razz me about a nice bowl cut, Dad. So I say, because I save a lot of money doing it this way. I haven't been to a barber. Probably shows when I don't wear my hair like this, but I haven't been to a barber in a couple of years. So there you go. B Hall. Let's look at the futes. Let's look at the futes right quick, and then we'll pop back, and then we'll go and do the news. Let's see the futes here. The futures. That's for all y'all in the know. All right, we're sharing here, right? Yeah. All right, we got the futes. Yeah, kind of flattish. VIX is up almost 2%. Hey, I'm waiting. I'm waiting. What happened to sell in May and go away and come back on something day? I don't remember the day. I think it was an English holiday or something like that. But yeah, The Dow's down. They're all down 0.5%. It's plus or minus. It's red, but nothing too crazy, at least right now. But Rich, I like it, man. If I had $1 million, what would be in my portfolio? What would the income be? Well, so an investment net worth or an investment portfolio of $1 million. Yeah, I mostly just what I'm doing now. I would have most of it in the core. The core is funds, right? S&P 500. So I prefer VTI, but where we have our 401k, I think it's John Hancock. They don't offer the VTI version. They do offer DFUSX, ticker DFUSX. Remember when you see that X, that usually denotes that it's in a mutual fund. So DFUSX is their version of the S&P 500. And then we have VVIAX, which is a Vanguard value fund. A lot of value stocks, things that are supposed to be undervalued, which is funny, right? Warren and Charlie would say, we don't understand when people call us value investors. What would you ever do? When would you ever make a non-value investment? You're always making some kind of a value investment. So like you said, to call us value investors is kind of nonsensical. So that's, I don't know where I was going with that, but yeah, I'm not a member of a union. We're a non-union shop. So, there's been instances in the past where the union has tried to come in. I don't know if they're hurting. I guess no shade. Everything has its pros and cons, but we've had companies I'm at, I've never been in a union, and we've had instances where the union just shows up and says, hey, we're on strike for you. And then they follow you to jobs and set up a picket line to try and pressure you into joining. And then any delivery, any union truck drivers, if we're at a warehouse or a shipping facility, once they set up that 2-3 person picket line, any union company won't cross the picket line, right? So it's going to affect that business. And then I wasn't too hot on that tactic because we didn't want it, but yeah. Oh, no, I'm glad you like the newsletter, Gabe. And sometimes just to tell you this real quick, and then we'll get over to news, and then we'll look up a couple of those for you. I know you're waiting for Accenture and United Health. We'll see what's up with that, but we'll go with the 30-minute mark, couple more minutes. So yeah, with the newsletter, dude, I enjoy writing what's on my mind. And, I guess the secret behind it is I usually write them to myself. Like the one I wrote today was kind of reminding myself about why we're doing what we're doing. And yeah, even though I'm doing the math in my head, I'm thinking this whole trip, when it's all said and done, could be pushing maybe 13, 14K. I don't want to throw in the 15K number, but you know what? At the end of the day, or month or whatever, my daughter, big Harry Potter fan, massive Harry Potter fan. She's 16, and it was sometime early last year in 2024. She's like, I'd love to go to London someday and see this and that and Harry Potter, this stuff in London and then in Edinburgh and Scotland and ride the Jacobite steam train, right? So me, I don't think I had it. Hopefully I didn't have anything to drink. I'm like, let's do it. I'm like, we'll do it next year. I'm like, you want to see it? Let's go. Let's see it. You're old enough. You'll remember it for a long time. Hell yeah. And then I open my big mouth, right? And I'm like, oh, how much? But no, honestly, that's what I'm going to remember. Do you think I'm going to remember and say like, boy, all those years ago, I'm so glad that instead of taking a family trip and making lifetime memories, we maxed out the 401k and the Roth, which we're doing anyway. But I guess I could say I added extra money to the taxable investment account. So look at those extra dividends we've had. So yeah, who needs those family memories, right? All right. So I thank you for that. Yeah, barbers are expensive. I remember they used to be that. I used to go to Great Clips and Supercuts. So we'll see. All right. Adam, we'll leave off with, yeah, I know, man. Like I said, there's good and the bad for everything. We'll go through your, Adam, you bought Fast Few Weeks, T. Rowe Price, Prudential, Target, Stanley Black and Decker. You're buying them. You bought Nike. You joined me on that one. Ooh, and as a risk, you bought Whirlpool. Very nice. Very nice. 24/7 trading during the week later this year. Yeah, we'll see how that goes. But honestly, for long-term investors, that's not going to do a damn thing, because if I'm buying a company that I want to hold for the next indefinitely, we'll even say 5 years. If you're buying a company for 5 years to hold, what does it matter if you can buy it at noon or at midnight? It's really not going to make that big of a difference. Maybe you get a few bucks cheaper, better price sometime. I don't know. So, all right, let's go look at the news, because Tony, I know we're going to see UNH. Remember, we left off with Swamiji here, who says experiences are the best investment, and they pay some of the best dividends too, which I shared a memory from the newsletter. All right, without further ado, I'll make myself small first so you get to look at this pretty black screen. That's the black. That's so black. Oh boy, there's a bunch of jokes right there, right? But when I was in the Navy, that is what the night sky looked like sometimes when it was no moon and we're in the middle of the Persian Gulf or the Indian Ocean, something like that. It is dark. It's dark like that. All right, anyway, so here we go. Continuing on with the program, IBM, and we'll go through some of these kind of quick, right? I always say that, like, you lie, you always promise us. IBM raised the dividend 0.6%. Yeah. Itty bitty teeny tiny dividend raises for IBM. I almost said OIBM. Oi, oi. Hey, OIBM. There you go. Starting to sound like Popeye there. IBM raised the dividend 0.6%. It counts. Hey, it's way underpacing inflation, and they ain't going to do a damn thing for anybody, but okay. Congratulations, IBM. You get that 30th consecutive year, but they refreshed their outlook on Prudential. Again, if you're new, this is on Simply Safe Dividends. By the way, you can try out Simply Safe Dividends for 2 weeks for free. Just no affiliate link. You just give them your email address. You don't give a credit card, anything. So knock yourself out. Create, what's 365 divided by 2? That number multiplied by that many email addresses, and you can use it all. Yeah, they won't track your accounts, but anyway, so they do a write-up, their own personal write-up. That's their outlook. So refreshing it means they went through and updated and refreshed the outlook. Stepan, specialty chemical company, they reaffirmed their dividend safety score of 80. And honestly, one of the problems with this, like Stepan, LyondellBasell, a lot of these commodity companies, something I've learned is that if it's steel, if it's lumber, most people and other businesses that buy from them, they don't really care where they get the commodities from. So that's kind of the downside to buying a commodity business, is that you're very dependent on the price of the commodity. And again, people are just going to go where it's lowest. So the commodity really dictates how much money the company usually makes. And I know they've been struggling right now in the chemicals business. So Stepan, there you go, commodity company. Starbucks, you sons of bitches, man. I thought for a hot damn minute on, when was that, Wednesday? Or was it Wednesday? It dropped below my cost basis of 75 and change, or 76, like 49, I think is our, the damn thing was down to 75.50. And before I could put it in, it started climbing up, and I was like, you know what? And I did. I put in 75.50 to buy like 5 or 6 shares, and here we are, almost 85 bucks a few days later. But if you guys want, we'll talk Starbucks later. I can share my thoughts if you want to hear them. I did in some of the last video. Get through these. American Water raised their dividend 8.2%. Look at, they might be undervalued. Some of you bring them up. Water utility company looks pretty undervalued according to Simply Safe. Organon, I had shares of them when I owned Merck once upon a time, and Organon is women's health, women's pharmaceuticals mainly. They were spun out from Merck, and yeah, they cut that dividend. So even though it didn't look like they had to, well, their debt was getting high. Their free cash flow payout ratio was low enough, but yeah, that debt, there you go. Debt is always a concern. Apple raised the dividend 4%, 13th year, stupidly low payout ratio. And actually, Apple looks, according to Simply Safe, reasonably valued. But one quick thought on Apple, the PE that you're paying, I don't, here, and show you guys instead of show me, don't tell me. Shout out if anybody's a Rush fan. I like Geddy Lee. I don't care what anyone says. Too bad we lost Neil Peart. So their dividend growth is kind of slowing down. But what was I going to show you about Apple? Oh, yeah. What's their PE is currently 27.4, right? A little bit high. PE of 27 for, look at the free cash flow per share. I mean, it's kind of died out since 2022. So the free cash flow per share and then total sales, right? 366 billion, which is a lot. But really since 2021, it's been flat-ish. So, I mean, I don't know what's going to really propel them to the next level. So paying a high PE for revenue that's kind of stagnant, not for me. But if you own the, your index funds, I got a lot of exposure. Ian Lopik was happy about this one. Raytheon, ticker RTX, grows that dividend 7.9. We'll call it 8%. Looking overvalued. UPS got another dividend downgrade from 60 borderline to 50 borderline safe. Trade tensions, right? It's all about the trade. So there you go. Dividend yield. UPS now with the dividend yield of almost 7%. That's crazy. And is anybody out there buying UPS? Looks like they're slowing that dividend down, taking a page out of OIBM. Couple more here thrown at you. There you go. Arbor Realty cut the dividend by 30%, and the dividend yield's still north of 11%. So this was, I tried to understand mortgage REITs. I really don't. So yeah, it's, let me know if you understand mortgage REITs and that industry. Paychex raised the dividend 10%. Congrats on them. They look reasonably valued. Kevin Burgess, one of his companies, did he sell them? Lamb Weston, they dividend downgrade from 67 safe to 60 borderline safe, which is Nexstars, ticker NXST. So Lamb Weston, ticker LW, got a dividend downgrade. Robert Half, it's a weird name, I know, but another human resource company downgraded their slow-moving labor market. Dividend downgrade to 70 safe. Could be undervalued, though, and a big dividend yield. So opportunities here, but honestly, that's something you would need to understand. And then lastly, Polaris, ticker PII, got a 40 unsafe dividend safety score. So if you're thinking of buying, I don't know how many people are thinking of buying leisure sport like snowmobiles and what do they make, ski-doos and stuff. Actually, I talked about this with Dan. Dan, if you're still watching, I can't see in the chat, but we brought up Accenture on our chat. You said you would stay away, I think, from the consulting companies. And very interesting. So Accenture, IT consulting, I don't know a terrible amount about them. So take from this what you will. And it's got what was the safety score? 92, very safe, very strong credit rating. So let's just take a quick peek. They grow the dividend very fast. In 2019, they switched from a semi-annual to a quarterly dividend. Okay. So that led to a small dip in their total dividend for that year. But yeah, I'm sure currently it looks, again, I don't know. I guess I don't know enough to speak intelligently on their business model because I've never dug in deep. If anybody does know, please share it. Dan, if you're watching, dude, just put a couple thoughts in the chat if you would be so kind to do that. But on all these little valuation data, the dividend yield's above the 5-year average. The PE, the forward PE is below the 5-year average. So those are signs that tell you things are, potentially trending in the right direction. And yeah, low payout ratios. Go through this a little quick. You can pause it if you want to look in a little bit deeper at this 10-year trends, but which look good. Free cash flow per share looking good. Sales growth is positive every year, goes through some cycles. They still buying back shares, total sales. That's what you want to see. Just, it looks really solid, but this is a bet on the future, right? The market's always looking forward. Their margins, though, crazy, still high, but they have been compressing. Free cash flow margin actually is up, hanging in there. So very low net debt. Still looks really solid on the fundamentals, but this is so going off the fundamentals looks like a slam dunk. But obviously, when the stock is down this far, the market is telling you something. Just like UNH is way, yeah, 399. I know somebody put it in the chat. A plus credit rating, very strong. They still give it 90. April 21st, 2025, they gave it a downgrade. So they downgraded. I think it used to be 99, very safe. But yeah, again, this is all about the future. They grow the dividend really quickly. 15 years growth. Getting ready for another raise here. Let's see, when was their last one? June of 24. So getting ready for another raise. It'll be very interesting to see. What was it? Sorry. 11% last, 14% 5-year CAGR. So we'll see if they keep it north of 10%. And if they keep it north of 10%, that could be a bit of a vote of confidence. But yeah, looking way undervalued according to Simply Safe, using the price to earnings. Dividend yield way above the 5 years. Yeah, so it looks cheap right now, but again, free cash flow payout ratio is really low still. This is one I'd like to get interested in, and I guess I would have to think and understand more about the future, where healthcare is going. It's such a big question mark. Like, do the GLP-1 drugs affect it? Is that going to affect health insurance? Is there going to be less? Well, that would be good for them, I think, right? Unless they have to pay for it, maybe. Yeah, free cash flow per share just up and to the right. So again, just like Accenture, the fundamentals look great. Earnings per share growth, just high single digits, sometimes mid-teens. Yeah, that's what you want to see. Shares slowly dropping. Sales is always going up. Oh, I know. You guys know you pay more in health insurance premiums. Every year it goes up. It does not go down. So that makes sense that they would keep getting more money. But yeah, margins look good. Net debt low, could be lower, but nothing's perfect. So obviously, I don't see anything wrong with the fundamentals. So just like I'm back on, you guys know. So back on, yeah. So just like Accenture, and I'll see if Dan, you put anything in there. We have to make an assumption about the future, and that's what's so dangerous. Will things go back to normal? I don't know. We would hope so if we're investing, but I guess the market a lot of times doesn't want to sit around and wait. So it'll make these quick emotional decisions, right? Which is what Warren and Charlie talked about, the irrational Mr. Market, which is what Ben Graham used to teach. It's like having a manic depressive drunk as a neighbor, right? If you owned a farm, every day he makes offers to buy your farm and you don't have to sell to him. The next day he'll be back with another offer. So yeah, that's we'll see what happens. Tony, you got in at 440 and sold at 560. Wow. Congrats to you, man. Congrats. No, we're not stocking up yet. I don't know what to stock up on. I know people were talking about another run on toilet paper, but quite honestly, I think 90% of the toilet paper sold in the United States, the paper products, are from here. So that really shouldn't affect anything. But yeah, I know. I do think high tech, that's going to hit, right? What were the import containers like at the Port of California down? 70%? Or it was that the number I heard, 70% they're down or projected to be down. So yeah, Gabe, as long as your bills are paid and you're looking for your senior citizen age that's coming, you're golden. Yeah, thanks, man. And again, that's talking about the trip we're taking. We'll make it back. And honestly, could you imagine if somebody said, hey, we're going to make lifetime memories, but to cover that 15 grand, I might have to work half a year longer when I'm in my mid 50s. Yeah, I think it's worth it. It's worth it because again, how does that saying go? If you're living in the past, if you're anxious, you're living in the past. No, I got that wrong. If you're depressed, you're living in the past. If you're anxious, you're living in the future. But if you're at peace, you're living in the present. And that's the thing. You're supposed to enjoy every moment like I'm enjoying here with you because I don't even know if I have the next 5 minutes or it's going to be 60 years. I hope they make advancements in that because I'd like to live as long as possible. But yeah, man. Sorry, Black Mirror. Do you guys watch Black Mirror? One of my favorite episodes was San Junipero. And it's just ends up being like brains in a jar where your memory will just forever go and you'll be able to do things. It'll just be your brain. The electrodes plugged in your brain. You're plugged into the internet. So Andre, look at that name, buddy. Andre Brown, aka New World Order. What's up, man? When I used to buy individual stocks, my best performing ones were the water utilities. So that's York Water, CWT, American Water, I forget those two, the AWs. And then the railroads. Yeah, railroads are looking interesting. I think CP, is that the Canadian Pacific Kansas City rail line? I think that is the only railroad that goes from Canada through the US to Mexico. So that would be a real interesting one to think about. What's up, Sir Dude, bro, man? Nice to see you here as an opposed to there. All right, I'm almost caught up to you guys. Blossom, I think I was going to say. Apple's PE for a company growing at low single-digit growth. Great balance sheet, but not for me either, and I own it. Want to sell it, been lazy. So, well, hey, I'm glad. Hopefully, great minds think alike here. But yeah, that's kind of the knock on Apple, right? Like, it looks like the growth is kind of stalled out. Maybe it's a little pause, but still, where's the big growth going to come from? When I'm across the pond, Janice, I talked about that with my wife. She said, "Are you going to do any recording?" Or I said, "I'm not going to do any editing." I'm planning on the interview I'm doing with Alex Morris, who wrote Buffett and Munger Unscripted. That's going to come out while I'm overseas. But I'm going to bring my MacBook. And if I'm at a spot where, I got an hour without rushing us back or anything like that. If we're winding down at the hotel, and I got some time, I'll pop on and see who's on. If I can get a shot out I see the rooms are really small over there, but so Janice, the answer is maybe, if it permits, if it makes sense. UPS should be named downs. Yeah. Good. I have Steve. I don't know if you've seen the Jeremy dividend stockpile. I haven't talked to him in a minute. I was telling my wife, I feel bad. Like all these people that I meet and talk with, it's so hard. We're all busy with our lives, and then before you know it, a week goes by, a month, and then it's like 6 months. But I think Jeremy had the fund manager from OMAH on. The video, I didn't watch it. I told myself I was going to, didn't watch it. So I would assume that anything you could possibly want to know about it will be there. So dividend stockpile, highly recommend checking that video out, Steve. Yeah, your other favorite individuals. What are you buying now if you're not buying individuals? GATX. Oh, you're all on the train stuff, right? TRN, isn't that Trinity? They do like the cars, I think the train cars or maintenance on them, something like that. GATX. I don't remember that, but that name looks familiar. I think don't they do intermodal or transportation, logistics, something with trains? My thoughts on CWT. What is CWT? Let me see just real quick. I'll throw it up. And they're like, please don't throw up. Oh, California Water Service Group. Well, they have a dividend safety score of 99, very safe. Well, I'll show you here. I'm almost caught up in the chat. So, Matt, it's your lucky day, Matt. I'll show you, buddy. And of course, I'm going to have to figure this out, why I have to keep changing that. All right, Matt. So, never looked at this before. California Water Service Group. So it's a water utility. Again, hey, dividends are qualified. Yeah, there you go. 99, very safe. Let's see. Founded in 1926. And lo and behold, they have water service provides in California. Increased the dividend during the last recession. Look at that. 57-year dividend growth streak. All right. 7.1 raise. That's good. That's a good raise. Professional opinion, right? Or non-professional. Special dividend paid out in February of this year. That's not a monthly, was it? No. Looks like it's undervalued. How did you find this one and come across it? What attracted you to it? Dividend yield is above the 5-year. Forward PE is below. Smack dab in the middle of the 52-week price range. Yeah, free cash flow payout ratio. Don't look at that for utilities. You want to look at the earnings payout ratio because they have to, they spend so much on the infrastructure and on the network and doing all that, but the government regulates and pretty much guarantees their profits that are going to be coming in. So you look at the earnings payout ratio, which was a little high in 23. But yeah, I don't know. Utilities, I guess. All right, it's safe-ish. Yeah, I don't know. I know margins look okay. Yeah, I don't know, Matt. Debt's not too bad. Yeah, I think they give a higher grace for the net debt to EBITDA. So this, when you see this number, that when it's 4.17, it means it would take 4.17 years of earnings before interest, taxes, depreciation, and amortization, or as eminent dead, long departed Charlie Munger calls EBITDA. When you hear EBITDA, just replace that word and just think bullshit earnings. So anyway, they use this metric. That's basically 4 years it would take to pay off the net debt. Yeah, so it looks okay. I mean, it's a utility. It's low, right? They talk about utilities. You kind of buy them like. But sorry, I saw your Tony. It's kind of like a bond proxy. How a lot of people have traditionally thought about utilities, but I think if they start cutting rates, the risk-free rate, a lot of investment dollars are going to come back into the REITs, into the utilities, into those things they call bond proxies, right? Stock up on future dividends. Hey, man. Have at it. I'm going to keep doing that. You know, you saw in the video, I, for the first time, included my 401k. A lot of times I ignore that, but I guess it counts, right? It's my 401k money. Thinking of starting a position in Nike. Yeah, well, we're 105 shares deep. I don't know how much lower. Is the bottom in? The bottom may be in. And yeah, Tony said Yield Max hasn't started an ETF on it. That's probably for the best. But, you know, I think once we get clarity, if we get clarity, I almost said Pope Trump. You guys saw that picture, right? I thought it was a joke like my family did at first, too. The Trump tweeted out a picture of himself as Pope. Hey, nothing like pissing off millions and millions of people around the world, right? But yeah, and that's the thing with the tariffs. It's completely self-inflicted, you know? We can just... it can be ended tomorrow, just ended. But a lot of people think the U.S. brand has been damaged, and a lot of foreign money is going to come out of the United States, and that's actually got me thinking about something like VYMI, getting because honestly, well, you guys know I used to invest in what are they called? Ahold Delhaize, right? They Koninklijke Ahold Delhaize over there in Denmark. I know that's butchered, but they are a supermarket company, and I know European Dividend Growth Investor loves them. So yeah, sorry, looking at that. But I guess it's harder for me to feel like I have a good grasp on understanding any foreign-based company, not like the headquarters, but any foreign-based company. So I would feel much more comfortable getting an ETF to get my exposure in there. So those water utilities are a beast on the dividend growth stocks. I get, I haven't done the comparisons. I'll take your word for it. But what time frame are you starting from? What dividend growth stocks? Because I don't know, man. If we're comparing like Visa or MasterCard, which have really quick dividend growth, Costco does. Are we comparing those to the utilities? So I love it, Gabe. Let's see. So here's the thing with, and I don't know if anybody answered this, but your question with SPYI and QQQI, those are income, right? Those are the S&P 500 and the NASDAQ. And I think they're writing derivatives on those to generate lots and higher income. I'm guessing you say 11 to 13% dividend yield, which they're not for me. You know what? Here we go. Watch this. I'll do this for you, Gabe. Let me see if I can remember that. SPY and QQQI. Oh, let me bring you with. The thing you got to look at is total return. And here we are in Seeking Alpha. Let me make you bigger, get you more real estate. So SPYI. Let's see if we can do this relatively quick. Hey, we talked to Nicholas Brado before. Look at that. He gave a buy on pairing SCHD with SPYI. But we'll throw SCHD in there. So SPYI. Now, what we want to do is charting. So you go to charting. I'll make that bigger in a minute. Select the metrics. We want to do total return. So we'll check total return. And then get rid of that. We'll do, there, it's got it on there. QQQI. We'll go JEPI. Then how about, for good measure, we'll just do, since it's SPYI, we'll do SPY and QQQ. Do the Q, and I think I get one more on here, up to 7. And we'll just throw SCHD in there too, for the heck of it. Everybody loves SCHD. So here's the thing. Going back 1 year from now, SPYI is a 12%, 15% for the Qs, JEPI 8, but S&P, like this is the thing. So you're getting those dividends, right? But I think some of it is return of capital, because look at this. 1 year, the S&P SPY, right? 13.65% total return with dividends received. SPY 11.94 might be the higher expense ratio too. The Q is 15.21, QQQI 14.94, and then SCHD's been lagging. Hey, nobody's perfect. 5%. And then JEPI 8%. So you always want to look at the total return. And let's see, the SPYI's expense ratio is 0.68%. So that's a bit high. And then the quant, this is their proprietary quant system, gives it a sell. So yeah, Gabe, a lot of times when I look at these income ETFs or funds, they just seem to underperform the correlated asset, I guess to say, or the reference asset, like SPYI with SPY. If you would have just bought SPY, you would have a bigger amount. And I guess we could have went back here. See if it's still up. I can tell you. If I go back 3 years, now see, it's not going to work because a lot of those are new. So, or it erased. Anyway, I'd have to set it up again. So that's my thing, Gabe. Just do a lot more homework on it. Ask AI to explain it to you. Pop on Seeking Alpha, see what you can read. I get it. We're all attracted. We want that high dividend yield, but at what expense? You're paying a lot more money to Neos, is it? Yeah, to Neos. So you're paying a lot more money to Neos. They're getting money Neos is getting a lot of money to underperform the reference asset. So and most of the times when I look at things like this, like the yield max funds, they almost always outperform on a total return basis. Oh, you found it. Good. Oh, wait, hold on. So Dividend Talks is, yeah, that's the ripoff guy. Now Dividend Talk, those are my guys from Europe, but Dividend Talks, English accent, dude, my MF is a ripoff. That is a ripoff artist. You can borrow ideas and things, but that guy, that's what got it for me. Is if you look at his thumbnails, he'll go to other channels and see what thumbnails are working, and people have clicked on his content thinking they're clicking on maybe not Ryan, because like Ryan puts his face on everything, kind of like I do, but they think they're clicking on a dividendology video, or they think they're clicking on my guy Nick, Dividend and Growth Income. Check his channel out. They'll think they're clicking on those videos, or who uses the blue? Maybe Joseph Carlson. Anyway, the guy's a ripoff, and then he rips off content. I wouldn't bother with dividend talks. Just go to the sources. It's like a watered down version. Nike under 60 is great opportunity. Yeah, and we're holding it there. We're planning to hold and for quite some time. Holy moly, the time goes. What the hell happened? All right, let me go through these quick here. Frank, how many open positions do I have? I think I'm at 14 individuals, and then the rest is funds. I think. Let's see if you guys had anything super important. Divo, that's a good one. Walk Toward Wealth. Kevin Simpson, I think is his name, right? Who runs it? I like his thought process. He wanted to hold the companies. He didn't want to do like synthetic covered calls on them. No, he was like, we're going to hold the companies, the dividend stocks. And if we can't find any opportunities to write covered calls on them, we'll at least be getting the dividend income until we do. And that's right. Oh, that's right, man. Yeah, that is one hell of a dividend streak. Let me see if Simply Safe has that. Let me see YORW. Let's see York Water. God dang it. I know you can't see this because I'm trying to do it really quickly here. They let me go dividends here. Yeah. They've been growing the dividend for 28 years, but their uninterrupted dividend streak is 209 years. So that is awesome. SCHY, the international like SCHG. Yeah, Janice, that's a great one. I'm going to have to look into that. So I'm going to, I'm going to look into VYMI and SCHD or SCHY. The only thought on that, and I got to do a little bit more homework, and maybe I'll make this the next video, is that I think I would hold it in the tax advantaged account, right? Because I think a lot of the dividends aren't necessarily qualified like an SCHD. So that's what, you're welcome, Gabe. I hope that helps again. And just compare. You can go to here. There is actually, I bet it's in my history. There's a dividend calculator. Yep, I got it right here. I'm going to put it in the chat. So there's a dividend drip returns calculator. You know what? I'll just show you how to use it. Here, let me put it in the chat. I know I'm over time here, but that's cool. I enjoy talking to all you people here. Let me show you how to use that. We'll do a run through of. So you go to dividendchannel.com, then right in the middle is that calculator tab. So you can do a symbol. We'll do, I don't know, what were you looking at? SPYI. How about that? So we'll do SPYI versus we'll do just SPY. So we'll put, I don't know, we'll go back. We'll do that I don't know how old the fund is. So we'll go back a year, right? We'll go back to, it's May the 4th. I didn't even say that to you guys. May the 4th be with you. Damn it. Here you go, Gabe. So May 24th, you hit chart 10K invested, and it'll bring you to this, and it'll give you two tables here. The top one is $10,000 with dividends reinvested. And on the bottom is without. So if you were just taking that money, or taking the dividends, but there you go. SPYI has a total return of 9.09%. But SPYI with dividends reinvested, mind you, this is if you get a dividend from SPYI and you threw that right back in and bought more shares. The S&P 500 up 11.23%. So very similar numbers, to Seeking Alpha, off a little bit, but that'll show you right there that you're underperforming. So I would say find out the inception date of like an SPYI and compare that from then to get a real accurate picture. But again, man, then you're not paying the crazy 0.68% expense ratio on that. So I would, I would Yeah, dividends from the Vanguard VYMI are generally considered qualified. Are they? I'm going to look into that. So maybe that'll be a good topic for the next video, because as this tariffs go on and as I hear and read more about investors around the world being nervous about the brand USA, the USA brand for security, stability, predictability, they're pulling money out and looking elsewhere. So if that happens and we have an outflow, it's going to impact our stock market. So I would like to, I guess, at least have more exposure, but I don't really understand the companies from other countries as well. So, oh, Josh, what's up? Hey, real quick, I'm not going to get off here for a second. It sounds really bad, right? But last two, yeah, can't go wrong with DIVO, IDVO. That's the international one, right? And QDVO. So, yeah, thanks, Andre. And yeah, DIVO, I should talk to, if he would come on, Kevin Simpson sometime. Really good book. I enjoyed that. So also, dude, you, Josh, you look like you're, what are you in? Was that Air Force there? Tell me real quick. I want to hear that. I'm trying to look at your avatar, you know. Um, Thoughts on Next Era Energy? Yeah, we've talked about them before. I think they look good. They're in a good, I mean, they're a utility, right? Let me see what Simply Safe says here real quick. If you want to, maybe if you can pop on next week, yeah, they get a dividend safety score of 90, very safe. And yeah, they're way undervalued. So again, I haven't dug real deep into the business to try and understand and look around what the thoughts are, why it's so beaten down. But as I'm just skimming here really quickly, the fundamentals all look good. It looks like it's a fundamentally sound company, but obviously the market is worried about the future. Yeah, even their net debt isn't too crazy. So the market is worried about the future, and it's always forward looking, right? So I think they should be okay. What's that thought on them? That they tried to go heavy into renewables, and that probably, or that is not, I believe, having the return on investment that the market expected from their renewable, diving into the renewables, right? Wind and solar and all that stuff. So I think that's, maybe the market's getting a little bit impatient with it. And, and that can be a great opportunity. If you think it's going to be good long-term and fine, perfect. But the market, it's like they want stuff now. It looks forward, and it's like, yeah, we don't have time to wait for that. And that's where a lot of us can, I think, make some money. So, Josh, I hope you pop on next time. I'd love to hear what branch you're in, or I don't know what that is. It looks like you're maybe in the military. So if you are, dude, just shout out. And Gabe, I clicked on you by accident, but I'm going to put you on anyway. You switch the 401k at the Ironworkers retirement account. Oh, VWUAX. I'll look at that, man. VWUAX. And all right, man, cool. I'll check it out. So, hey, that's it for me. We're going to watch a movie or something with family. I hope they picked it out, because sometimes we spend like 30 minutes trying to find something everyone can agree on. But hey, what we can agree on is that I'm happy you were here and you made it to the end, and love the questions. I love everything. And hey, let's see what happens with Berkshire. Maybe it starts losing some of that Buffett premium. So thank you, everybody, so very much. And I will talk to you next week. Let's do it again.